We're seeing some different situations in different sides of the transaction market. So in terms of assets with financing already secured, they are proceeding to closing as planned with the financing in place as agreed to. Deals under contract with franchising or financing requirements left to be determined are largely being put on hold. Large brands like Marriott and Hilton have put holds on their management screening processes. Lenders have put holds on basically all types of underwriting and lending activities, at least until the market stabilizes.
This is the Lodging Leaders Podcast with John Albano
and Judy Maxwell.
Session number 261.
Welcome to the Lodging Leaders Podcast, where top-performing hoteliers and hospitality industry experts share powerful insights and actionable advice to help you grow your portfolio. And now your host, John Albano.
Hey, Lodging Leaders, thank you so much for tuning in today. You can find the show notes, links, resources, and comments section for this episode at lodgingleaders.com/261. Let's make a deal. Coronavirus crisis alters hotel transaction landscape. The U.S. hotel industry has practically grinded to a halt in the wake of the coronavirus crisis. As Lodging Leaders shared in our previous report, episode 260, hotel business performance has declined to unprecedented levels. Another area of the industry that the COVID-19 pandemic is impacting is hotel transactions. Properties remain on the market, but lenders have stopped underwriting new deals for the time being. So if you're eager to buy a hotel, bring your cash. In this episode of Lodging Leaders, we examine the current state of the hotel sales market. We feature Carter Wilcox, sales associate with Mumford Company, and Daniel Lesser, president and CEO of LW Hospitality Advisors. Hey, Lodging Leaders. No doubt the coronavirus crisis is bringing you a lot of bad news these days. We want to change that up a little bit. In one of our previous episodes, we featured the amazing story of a hotel that was able to make payroll after a stranger bought 52 room nights in an act of goodwill. We're on the hunt for more stories that shine the light on good things and good people you're experiencing during the crisis. So if you have a story to share, let us know at longlivelodging.com/contact-us. Marcus & Millichap, a national commercial real estate broker, published a report this week that reveals the new coronavirus crisis has altered investor sentiment. Hotel owners are facing tremendous business challenges. As a result, buyers and sellers have realigned their expectations. Given the rapid growth of COVID-19 infections in major cities, investors are turning away from urban and primary metro markets and shopping for deals in less densely populated areas. They're also adopting a more favorable view of assets in the mid-scale and economy segments. That's probably because STR and other data analysts have reported hotels in lower price tiers are seeing higher occupancies and RevPAR compared to high-end properties in the meeting and convention markets. Though groups, business, and leisure transient travel are off the table at this time, essential travelers such as truck drivers, first responders, and healthcare workers comprise some of the current demand for room nights, however slight. As for prospective sellers, they're taking this time to complete value-add renovations and repositioning to be prepared for when the crisis eases and the industry is in a comeback. Meantime, prices that have expanded out of reach for some investors over the past few years are aligning with the new reality. The spread between the owner's ask and what the investor is willing to pay might be narrowing. Carter Wilcox of Mumford Company said while owners should not consider an unadvised change in their listing price, the business crisis is influencing the perceived value owners had of their asset before the coronavirus pandemic.
Owners who currently have hotels listed who are eager to sell are taking second looks at offers that we had on the table, say a month ago, that may have been fair, but below what they wanted to accept at that time. There's always been a slight disconnect between what the current owner and seller of a property would like to get and what a buyer would like to pay. We make sure that every property that we bring to market has a list price based on underlying fundamentals and historical operating statistics.
For the most part, Wilcox said, though hotels are still for sale, the environment has significantly changed.
We're seeing some different situations in different sides of the transaction market. So in terms of assets with financing already secured, they are proceeding to closing as planned with the financing in place as agreed to. Deals under contract with franchising or financing requirements left to be determined are largely being put on hold. Large brands like Marriott and Hilton have put holds on their management screening processes. Lenders have put holds on basically all types of underwriting and lending activities, at least until the market stabilizes. In terms of listings, we're seeing a high level of cautions when it comes to new listings. Current owners with hotels listed for sale are more concerned with regaining stable operations than selling. But, that doesn't mean that they are not interested if the right offer comes along on a property that they've already got listed.
Once the crisis eases, investment opportunities might be more democratic and attainable for would-be investors who are shut out of the market by high prices.
Since 2017, especially in the economy and independent properties, we've seen large increases in average sale price and average price per room metrics, which have translated to big premiums on lower end properties, which have created a tough market for first-time buyers and owners of 1 to 2, maybe 3 properties who are looking to increase their portfolios. Along that same time, we've also seen a huge uptick in transaction volume. So there's lots of hotels on the market, and they're also selling for higher sale prices and higher prices per room. So that's created very positive outcomes for sellers. And on the other side, it's created high levels of competition for purchasers. We have purchasers who are cautiously optimistic that maybe the seller's market that we've seen from 2017 through 2019 may be taken back to the basics, and some of those economy or mid-scale properties may be valued on a more realistic level by both buyers and sellers, which would create opportunity for, like I said, especially first-time buyers or buyers who maybe want their second economy property to increase their portfolio value.
For finance deals in the works when the new coronavirus paralyzed the industry, Daniel Lesser of LW Hospitality Advisors agrees that they'll most likely close. Those are the exceptions, however.
It's probably not a whole lot of downside to letting the process proceed, although there really is no process at this point, if you think about it, right? The capital markets for hotel financing are shut down. So unless there are buyers out there who are willing to pay all cash, but then that begs the question, are they willing to pay market value or liquidation value? There's a big difference. So market value is predicated upon the definition of willing buyer, willing seller, neither acting under duress. And I think it's safe to say that if financing is not available, that clearly is a distress factor.
With any prospective investment of an existing hotel asset, due diligence usually requires the would-be buyer to spend time at the hotel to study how it operates. It's difficult to get a realistic picture these days. Valuing a hotel asset can be a challenge in today's new normal.
There's no doubt that's going to be a challenge. There are all sorts of theories that people are talking about at this point, but until the market speaks, it's just going to be that theory, right? So when one determines value of a property, it really should be predicated upon, and let's talk about market value. It should be predicated upon the actions of the marketplace. How are buyers and sellers and lenders actually pricing assets? And so an appraiser, if you will, is supposed to reflect the actions of the marketplace, not create what they think the marketplace should be. It's going to be a little bit chicken before the egg type of situation because the markets need to get open and operational again before we can move beyond theoretical discussion of how to value assets. I think it does make sense to consider looking at a hotel's in-place net operating income a couple of years back, whether it be 16 or 17. Right? I wouldn't look at 19. I probably wouldn't look at 18. Again, this is also going to be predicated upon the asset and where it's located. But generally speaking, I think if one were to look at 2016, 2017 net operating income, and then applying some sort of a capitalization rate to it. But then the capitalization rate is predicated upon financing, which is not available right now for hotels. It's a tough thing to do right now. And sure, I've heard all sorts of, like values are down 20%, 50%, 70%. You know what the reality is? Nobody knows.
Lesser advises appraisals should do what they've always done and take a broader look of the hotel's business performance. Lesser explains why 2016 and 2017 are good years to review.
19 was an all-time high in the sector in terms of not just RevPAR and other operating metrics, but profitability, right? 18 was also a very strong year. So when you capitalize a single year's net operating income, what it does is it reflects an income stream into perpetuity. And theoretically, it represents the average net operating income over the economic life of the asset. So some years the income would be higher and some years the income would be lower. And a single year's net operating income is supposed to represent, again, an average over the economic life of the asset. So if you took 2019, which was an all-time high, I don't believe that would be very credible because, again, it was an all-time high. 18, again, was pretty close to all-time highs. And therefore, I'm thinking that 16 and 17 are more representative of average over remaining economic life.
Lesser was quick to say his thoughts are based on theory. Investors should value a hotel using more than theory.
The bottom line is that hotels are valued based on discounted cash flow analysis and not capitalizing single year income streams. But because of the difficulty in being able to do projections, what I'm suggesting may be a way to, for now, and in the near future, consider a methodology to come up with some semblance of market value. I'm assuming that the market will consider to do an income analysis and a look-forward projection. But until the markets start re-engaging, there's no empirical evidence to point one way or the other.
Lesser's clients are faced with a difficult decision of whether to keep their hotels open or close and wait out the COVID-19 storm.
There are a number of major concerns. Number one, hotels that remain operational, figuring out whether it's economically viable to remain open as a transient lodging facility, right? When you start getting into, 8% occupancy levels, there's a real question. And I'm talking about pre-debt service payments, just from a pure operational perspective, right? If you're losing money keeping a hotel open, and I'm talking about losing money before any debt payments, that's not a scenario that's very durable, right? And so, clients are considering, what do we do? Do we keep these assets open? Do we shut them down? Do we try to figure out alternative uses and sort of get ahead of everybody else and contact FEMA, state authorities, hospitals, what have you, to make their properties available for alternative uses, whether it be for economic benefit or merely the notion of keeping a hotel open and operational, and then the rewards that I believe owners might get from being good public citizens and opening their facilities for needy times like we are living in today.
Wilcox with Mumford Company said for those seeking opportunistic investments, it's important to do the math. A prospective new owner wants to be sure he can do enough business to pay the mortgage loans and put cash into a reserve fund to cover 2 months of operational expenses.
Hopefully, this crisis that we're seeing now is a relatively short-term issue, especially in the lodging markets. It has not seemed to slow down the interest of most hoteliers who have cash on hand and were planning to purchase already. Now maybe they're just looking at the opportunities a little differently than they would have 6 months ago. Hotels are still for sale. Mumford Company and other brokerage firms still have properties listed for sale. There are still good value add properties on the market right now. So if you are in a rush to spend your 1031 capital gains deferred money, there are properties available on the market right now that are priced at good value and have upside potential. On the other side of that equation, though, you don't want to make a bad investment with your proceeds from sale of your last hotel based on uncertainty in the market. that's something that you would really have to bring in your financial advisors, maybe get opinions from someone like Mumford Company, any other brokerage firms out there as to what you stand to get taxed on based on the proceeds of your sale, and weigh that against whether now is the right time for you specifically to move into another hotel investment. And that answer could be different based on the position you're in, other holdings, any number of variables that play into each individual situation.
Wilcox and Lesser both advise owners keep a positive outlook and try to look beyond the coronavirus crisis.
Stay calm and be optimistic. We will get through this.
We at Mumford Company are very positive about the future of the hotel industry. Right now, we're spending every moment we can absorbing information from places like STR, numerous other data sources, and all of the data that we are seeing now says times are going to be hard in the near future. Hopefully, as many hoteliers as possible have reserve funds that will allow them to keep the doors open in the short term. But also every news source that we see says that the hotel market will recover. When? There's so much uncertainty in the market, almost nobody can say. But everybody is in agreement that based on historical data, the hotel market is going to recover. It's going to rebound. And we're very positive about the outlook 6 to 8 months from now.
Thank you for tuning into this special edition of Lodging Leaders. This is episode 261, and you can find the show notes, resources, links, and comments section for this episode at lodgingleaders.com/261. Thanks to Carter Wilcox, Sales Associate with Mumford Company, and Daniel Esser, Founder, President, and CEO of LW Hospitality Advisors. A multimedia presentation of this episode, as well as more information about the new coronavirus pandemic and its impact on the hotel industry, can be found on our website at longlivelodging.com. We want to know how the crisis is affecting your business and your life. You can share your experience in a 2-question survey at lodgingleaders.com/myexperience, or leave us a voice message at lodgingleaders.com/message. If you like what you've heard today, please consider sharing it. There are links at the bottom of the show notes for each episode, which make it super easy for you to spread the word. If you haven't done so already, please visit us online at lodgingleaders.com and subscribe to the podcast. There are links for subscribing on iTunes, Android, and Stitcher. There is no cost to subscribe. All it means is that you'll automatically be notified when the next episode is released. And if you're enjoying the show, please consider leaving us an honest review on iTunes. It really does help us out, and I promise I read every one of them on the show. Thank you so much for listening in today. I look forward to seeing you next week. Take care, and long live lodging.
Thanks for listening to the Lodging Leaders Podcast at www.lodgingleaders.com.